All right. All right. So first thing I want to do is share my screen and let's check out some news. The reason why I like to check out the news is because I like to see what's coming up for the week. Sometimes traders don't check the news, but there's always some nuggets of information or some surprises that could be found while looking at news. So let's go to going home products. Let's look at the calendar and let's look at the economic calendar. So Um, looking at the economic calendar, that's last week. This week, all right, cool. So what you can do is turn this high importance indicator on or off to check to see, you know, any major events. Normally, I have it turned off, but I like to turn it on just to make sure I ain't miss anything. But Monday, it seems like it's going to be a smooth day. We have no major reports scheduled. Tuesday, same thing, no major reports. Wednesday, we do have inflation reports coming out. So lately, inflation has been shown to cool. Now, on Wednesday, when these reports come out, the key is that the key that a lot of investors and traders are going to be looking at is the rate of inflation, the fact that it's cooling. Is it increasing or is it staying the same? We know that inflation has gone down, or the rate of inflation has gone down, but we want to know if it's going to continue to go down to further reinforce not just a cut from the Feds on the 17th, but deeper cuts the further we move throughout the end of this year and the beginning of 2025, which is going to be good for the market. So Wednesday, 8:30 Eastern Standard, pay attention. We could have some volatility in the market leading up to this, but we'll see. Thursday, we have PPI, another inflation report. So this is an inflation heavy 2 weeks that we're going to be going into, because we have this week, we have two inflation reports. It looks like, yep, these are the only two, PPI and then core inflation rate. And then next week, we have the actual decision from the Fed. So interesting times that we're going through, but I think that the market pulling back to the last 2 weeks, there are some really good opportunities on buying some strong stocks. Also, let me see if it's going to be here. I don't think they'll do it. I just wanted to check this real quick. Yeah, nothing major. Yeah, okay, cool. Nothing major. Another event that they're probably not going to have posted here is that Apple is revealing the iPhone 16. I don't know if anyone has already took a look, but the iPhone 16, in my opinion, is just the iPhone 15 with AI capabilities. I don't know how that's going to impact sales, because the iPhone 17 is actually the iPhone that I think that everyone should go for. The iPhone 16 is just the 15 with camera upgrades and AI capability. iPhone 17, it looks like a whole new phone. It's going to be thinner, so on and so forth. So with that being said, with Apple revealing their iPhone tomorrow, for the last, I would say 2 or 3 years, I haven't seen any positive returns from Apple on the day that they announced their iPhones. If someone else has this information, again, I'm just going off the top of my head, you can correct me, but from recent memory, anytime anytime Apple releases or announces their new iPhone, we see a pullback. And we'll look at Apple's chart later on to see if there's a play to be made, if we're going to play options, or for people who are already holding shares in Apple to, I guess, get out the way or be in position to buy the dip. All right, let's talk about risk management. So this is what I want to focus on really quick. This portion of the article, if you've already taken a look. So I'm not going to read this verbatim, but pretty much there are some primary types of risk management, right? When you're trading, you want to make sure that you're not risking more than what the reward will be. For instance, just if we're just using the simple layman's terms, you don't want to risk $10 for a $2 profit, right? Because if the risk is losing 10 but only gaining 2, that's really not worth the trade, right? And I think that when we look at trades that we set up, and if we're trading them from support to resistance, so we're trading them from the floor, from a bounce off the floor to a tap on the ceiling, we want to make sure that it's actually worth the trade. And I can show you an example of what I mean. So we're going to talk about the risk reward ratio. Again, just a quick example. So if we look back at, let's pick We'll use the S&P. Let's be some hypotheticals. All right. So when looking at the S&P, I'm going to go ahead and label my support and resistance areas. Put them here as well. Oh, didn't mean that it's H. There we go. All right. So actually, I'm going to put one more here. So these lines are support and resistance lines. If you've been in our previous sessions, you already know what these mean. Support is the floor, resistance is the ceiling. So when you're looking at risk management, what you want to do is make sure that there's more to whatever side you want the trade to go to. So if we're trading the S&P, we're trading the SPY, and we want the SPY to go up, we can see that the SPY has been going down for the last 4 days. It's been consolidating for a few weeks here, but we can see that this is Friday, Thursday, Wednesday, Tuesday, Monday. It looks like, yeah, 1, 2. Oh, no. It was only 4 days that the market was open last week. So we got Friday. Yep, this is Friday, Thursday, Wednesday, Tuesday. Okay, so last 4 days, the market has been tanking, but we can see that the market is testing support. We can see that it's testing a floor that it has tested and bounced on many times. You can see here. You can also see here, and it's major that it actually broke through this one because we thought that this one at 545 would be the one that holds. So now that we're sitting here at 540, you want to know, okay, what's the risk of me jumping in versus me not jumping in, right? So if I jump in here at 540 and I want to take it back to the upside, where do I think it will stop at? Well, the first level is about 540 to 545, right? So that's a $5 gain to the upside. And then if we also think about the next level, so what I'm doing is setting 2 levels of resistance, right? So this first level, 545. So we have $5 to gain here. And if we need to identify a lower floor, we can pick one right here. And the reason why I'm picking this one right here is for the same reason. You can see that the stock was going up and it started to consolidate and trade sideways before it broke up. Same thing here. Stock was going down. It checked in here before going lower. And on the way back up, it also checked and closed there. So we can tell that this is a good line of support as well. So looking at this, the risk reward ratio is that, hey, right now we're at 540. We could drop down potentially to 532. So it's an $8 drop. And if we're only targeting this level right here for a $5 swing to the upside at about 544, 545, that's how you want to start thinking about your trades. If I jump into this trade now, I can lose $8 to the downside if I fall down to this level of support versus only making $5 to the upside. Is that worth the trade? In this case, in my opinion, I would look at my other indicators. If I check my other indicators, I can see, okay, well, the RSI is at 41. It's pointing down. The MACD has already crossed over to the downside, and that's the stochastics is pretty much on the floor at 0. So honestly, this is a trade that I would look at taking. The reason why I would look at taking this trade is because we do have an $8 pullback with a $5 to the pop to the upside, but we've been in a downtrend for a while, right? We've been in a downtrend for a while. And then also the stochastics, which is our momentum indicator, it is pretty much flat on the floor, which when your stochastics RSI is flat on the floor like this is nice because that means that if it pops back up to 20, 50, 80, or 100, that's a strong move to the upside. You can make a considerable amount, right? And we can see that when you look at the stochastics is that it likes to frequent 100 at the top, 0 at the bottom. So when we look at this again, put it right back up here. You look at this one more time, we can say, okay, again, 8 to the downside. If I'm targeting this, I only get 5, but it's been in a downtrend for a while. And eventually someone's going to buy the dip, and traders and investors are going to buy the dip at some point. Our indicators on the daily, I haven't checked the 4-hour or 1 week because I'm just using this as an example. The indicators are telling us that this could be a nice buy point. And if I'm wrong, I lose $8. If I'm right, I make 5. The thing is that if we break above this 5, there's potential to stop here or there. So you could stop here right along your moving average at 550. So that's now a $10 gain versus an $8 drop or pullback. So again, it depends on how long you want to stay in a trade and where are you targeting your entries and exits, right? So you can have 10 here, or you can aim even higher and the wider the margin, the more risk you're taking on, right? So looking at this, I would take the trade. I would take the trade up to here first. That's my first price target at 545. My next one would be 550, and then the next one would be around 553 to the upside. Again, that's just looking at this time frame. So that's one way. Again, I'm just using an example to show you the risk reward ratio that you could do just really quick to see, okay, how much would I lose versus how much would I gain? Now, every chart that you look at won't have the same indicator setup. Like for instance, this one is telling us that we've been in the downtrend, and the downtrend, the momentum of the downtrend could start to slow soon, and then we could start to move back to the upside. So this is one that I would pay attention to and watch. Now, again, we covered news, so we do have Apple and Apple's earnings, so that's going to be pulling the rabbit out of a hat. You never know with Apple. But again, if I'm just looking at this on the daily, I'm thinking it's going to move back to the upside because of the last 4 days, strong moves to the downside, and we sat right on top of support. And then our indicator, our momentum indicator is telling us that pretty much the momentum is gone, and we could see some buys come in at any point to take us back up. We're not going to go all the way back up to 560, but I could see us getting back up to 545 to 550 sometime this week. So we just got to pay attention to Apple and those other reports. But everything being even, that's what I would see. So that's just one example of that. The next thing that this article talks about is hedging. So I know that we've talked about hedging in the past, and there's a few ways to hedge. So if you want to hedge, and first of all, let's talk about why hedge. So if you have, let's say, if you've been trading semiconductors for the last, I don't know, year, right? You've been invested in NVIDIA, AMD, all the AI plays. You want to have some sort of protection to the downside, aside from a stop loss, just in case, things go south, right? So when you hedge, you can do two things. One, you can buy an inverse of whatever you're trading. So let's say we're looking at the SPY, right? When I say inverse, you want to buy an inverse ETF. So that means that I want to buy something that's going to go up when the SPY goes down. So one thing that goes up when the SPY goes down is the VXX, right? You can add this one to your list if you want to. I've been watching this one. We've been trading the VXX for maybe like 3 or 4 years now. But we can look at the VXX and see that it's been making some large moves to the upside. It was consolidating for a while, but then it's been making some large moves back to the upside. And you can see back here, it's been popping to the upside as well. So this is one way that you can hedge, is to play against whatever position you have. You can buy shares of the VXX if you own shares of the SPY. And then once the SPY goes down, the VXX goes up, you can cash out your shares of VXX and then buy the dip on the SPY while it's down, right? Another pair that you can use if you don't trade the SPY, let's say you trade the Qs. A lot of people trade the Qs instead, right? Qs chart looks similar to the SPY. If you're trading the Qs, and it's going down, and you say, hey, I need a level of protection, again, find this inverse. The inverse would be the S, and I call it the SQs because it's QQQ. And you can see what it's doing. The exact opposite. So this is going up. The Qs, let me see if I can do it like that. We compare it. All right, there we go. Let me clear some of this stuff so I can show you exactly what's happening. And you can see the mirror effect happening when I clear this up. So this top line, this red line is the Qs. This with the candles, this line here is the SQQQ. So this is trading in the inverse. So this is how you protect yourself. So when the Qs go up, the SQQQ is going down. When this goes up, this one is going down, and vice versa. So take that off real quick. So you want to add this one to your list as well, because again, this could be a form of protection. You could buy shares of this. If you own shares of the Qs, you can buy shares of the SQs to protect them. That's one way to hedge. Another way is to buy, sorry, text me. Another way is to buy puts. And let me see if the paper trade connected. I'm gonna connect. Cool. Do I want to use this? Yeah, we'll use that as an example some other time. But basically, what you want to do is buy a put. So a put is an option contract that increases in value as the stock that's attached to it goes down. If you don't know anything about options, calls are bets that a stock is going to go up. A put is a bet that a stock is going to go down. So what you could do if you're trading the SPY and you're afraid of it going down, you could buy some puts, whether you buy them in the money or you stretch them out a little bit. You could buy some puts to protect yourself on the downswing, right? So if I'm looking at buying puts on the SPY and I need to protect myself, if I wanted to be extremely safe, I would buy them around these supports, right? So you could buy a 540 support. I'm sorry, you could buy a 540 put because it's support to protect yourself just in case the SPY goes below 540. Let's say the SPY decided to drop down to 530 and you bought puts for it with a strike of 540. You could be protecting yourself for that downswing. And so once it goes down, the put is going to increase in value. You can take the profit from the puts and put it right back into your holding of the SPY. Once the SPY goes back up, you have more capital to invest with. Do I have any questions? Okay, cool. Let me check the chat really quick. No questions. Perfect. All right. So yeah, you can buy now if you want to stretch it out a little bit, then you could buy I wouldn't even buy a 530 put. You can buy something in between. If we have support at about 540 and then we have support at 530, you can pick a strike that's right in the middle at 535 and still be okay. That way, if this decides to pop up and it rejects off this support, it starts to go up towards 545. You can go ahead and exit. And then that contract shouldn't cost that much because it's further out of the money. The deeper you go in the money, the more the contract is going to cost. But yeah, so that's two ways to hedge. Again, you can buy inverse ETFs to offset your ETFs. You can also buy, like they said, protective puts. Again, it's a wealth of information in this article. You can take it, break it down. If you have any questions, just let me know. And then the last way is stop losses. Setting a stop. So a lot of times we like to bank on ourselves as humans and say, hey, if it goes down far enough, I can just simply hit the button and get out. It's never that simple. When you're losing money, it's you want to see how far it's going to go sometimes, and sometimes your emotions get in the way. You're taking a massive loss and you don't know when to call a stop. A stop loss can stop you from losing money. That's exactly what it means. So what I would do when I have my support or resistance already lined out, what I like to do is if I'm looking at the SPY, you can set your stop loss about, I would say, $2 to $5 above or below your support. So for instance, sometimes we're going to look at support and it's not just going to touch. Sometimes it may dip right below support. So if support is at 540, right? You could have midday, the stock drops down to 538 and then it comes right back up, right? It'll go right below your support. So I'm saying this because if you set your stop loss too tight, then you could be shook out of a trade easily. And sometimes you can't avoid being shaken out of a trade. Sometimes it really doesn't matter. They're going to do a stop loss rate, drop the stock maybe $5 below your stop, take you out, and then send it back up. With those, it's nothing you can do. But the greatest thing is that you didn't take a massive loss, right? Because sometimes it can just flash through your stop and keep going. But again, setting your stop loss, again, $2 to $5 around your support would be good. And you can set it before. If you want to be extremely conservative and you know, okay, on the way down, let's say if the stock was at 545, it's on its way down to 540, you can say, okay, I know we have a bounce at 540, we have support, but I want to get out before that because I don't want it to even test. It could test support and just flush right through it to the downside, right? So you could say, okay, well, going down to 540, I'm going to set my stop at 542. If it gets down that low, it's pretty much confirming that we're going to go ahead and touch that 540. I don't want to see it. Let me go ahead and get out the trade. So setting your stop like that on the SPY definitely helps. Another thing that you can do is think about percentages. How much of your portfolio are you risking on the trade? And then how much are you willing to set your stop for? Some people are fine with setting a 10 to 15% stop loss, depending on if they're trading options or stocks. Normally, if you're trading shares, 10 to 15%, sometimes 20% works as a stop loss. If you're trading options, you're looking at 10 to 15%. That could be dangerous depending on the speed of the trade. If you're day trading, I wouldn't be looking, if you're day trading or scalping, actually, I wouldn't be trying to look at 15% loss. 10% loss is more than enough to go ahead and get out, in my opinion, if I'm day trading or scalping. Now, if I'm just swing trading, I'm fine with 20%, honestly. If I get down to 20%, that gives me 80% of the capital that's invested to go ahead and take it out, move on to another trade, so on and so forth. I recommend everyone that's listening to say, okay, when I get in this trade, how much am I willing to lose? I think when it comes to trader mentality and psychology, I think that we get stuck on how much we have to win. We never think about how much we have to lose, right? But I think that should be the first step. Set your stop loss, figure out where you're going to get stopped out at, and when you're going to do it. Again, depending on the style of trade, you're going to get stopped out sooner. If you're scalping or you're doing day trade, you might want to set it a little bit tighter because things can happen in a blink of an eye. And if you're swing trading, to where you may be in a trade for a month, 3 weeks, I don't know, 6 weeks, so on and so forth, then you may give it a little bit of leeway. You may do 15, 20, 20%, depending on the volatility of the stock. So those are just a few things that I wanted to touch on. I know risk management is extremely important. Some people that are like, man, I thought the market was going to keep going up. It tanked, and I didn't know what to do. I just sat and watched. It's like there was a few things you could have done. Again, you could have set a hedge when the market was consolidating. Because look at the SPY. Once it hit that 560, it sat there for 2 weeks just chopping, not really even moving, and then eventually it chose to the downside. And I mean, look at how far it had come up already. It was all the way down here at what, 510, shot all the way back up. So that's a $50 pop to the upside if you would have bought the dip down here. At some point, people have to take profit. And right at 560, you can see that's where a lot of profit taking was happening, and then it just dumped. So again, a hedge, a stop, or you could have used protective puts. Puts probably would have been the most profitable if you use protective puts. If you would have tucked it right underneath that 560, if you see that 560 line being tested, I mean, again, that's for about 2 weeks straight. You would have put your put here, and you would have caught all of this to the downside. That's a $20 drop from 560 to 540. You would have caught that drop, and you could have set a 555 to 550 strike on that put, and it would have been a nice trade to the downside. And then you can take that profit, wait for it to recover and bounce to the upside, go ahead and throw it in calls or buy shares to swing it back to the upside. But yeah, again, these are just 3 things. This is not everything. If you all have any questions about risk management, just let us know. You can put comments in the chat, or you can send us questions via the platform that you reached out or that you connected to us on. If I don't have any other questions, I'm going to go ahead and pass it over to Mark, and he can cover you all's picks. And I'll wait to see if you have any questions. We'll get a few seconds. I don't think we have any. Let me check. Nope. All right, cool. All right, I'll go ahead and pass it over to Mark.
Appreciate it. You got to put, I know Ty had more.
Oh, yeah. Let me get let me get Ty's stocks for you real quick. All right, she had NVIDIA, Micron. I'm typing it in the chat for you.
Yeah, that's
and Coinbase. Boom, there you go.
okay, perfect. And then if anyone else have any stocks that they want me to look at, feel free to put them inside the comment section and I'll go over them. I'll get started on ties. So the first one we have is Microsoft. All right, so we'll get started looking at the weekly. And then we'll go back and check out the daily to see what's going to happen on the daily. So I remember last week we talked about Microsoft potentially pulling back to its moving average, this 50-week moving average we have here, and then it's potentially making a double top, double bottom, excuse me. And it looks like so far it's been doing it. It's going down and it's testing that 50-week moving average. And we said anytime a stock price is testing the moving average, depending on the way that the stock price is set up, whether it's above the moving average price or below it, it's going to treat it as either support or resistance. And we can see here, stock is treating this weekly 50-week moving average as its support line. So what we're looking at is, can Microsoft break below this moving average? If it breaks below the 50-week moving average, again, we're going to be going down and trying to test 375. The way that all of the indicators are set up, it's looking like this is probably going to be the bottom for this stock currently. And we're probably going to see this stock price start to recover and try to trend upwards. Now, if it was to start to trend upwards, the first place is going to go and test is going to be here at about 410. Okay, that's going to be our first area of resistance. And then if it breaks above that resistance, the next place is going to go and try to test. It's going to be this 420 range. For me personally, what I would want to see from this stock is for it to break above this 420 range. Because again, we're looking at the weekly. It's looking like we're currently in a double bottom. And I know with the double bottom pattern, once it breaks above where the two ends meet, or where this neckline meets here at 420, we're going to be on the uptrend to the back to the top of this area. So we're basically, once the stock price breaks above 420, 426, 425, we're going to be seeing this potentially get back to 460. So I would just be waiting on that, just because this can also be a bearish flag to where if it breaks below it, you could be seeing an even deeper decrease in value. But the way that the way that the indicators are looking up, the stochastic, the regular RSI level, it is pointing downwards a little bit. So it does have room to continue to go down. However, we see in the past, it's been treating this 50 range as its bottom, as its neutral zone. You can see here, we scroll out a little bit. You can see ever since we've hit the 70 range, the oversold region, overbought region, excuse me, it's been treating 50 as its bottom. So anytime it gets relatively close to 50, the RSI level turns around and trends back upwards. So this could be the bottom for the RSI level. And looking at where the stochastic RSI level is at, it's giving me a lot of inclination that this stock price is about to, or the RSI level is hitting the bottom, because our stochastic is also in that oversold region. So that oversold region for the stochastic RSI level is showing us that, hey, we have room that is about to start to turn around and go up. So just be on the lookout for that. So what I'm looking for is, can the weekly, can it break above, or can it reject this current price? So it's rejected last week. Can it continue to reject this and trend upwards? If it is going to trend upwards, we're going to be getting back to about 420, 425. And now if it was to break below it, then we could be seeing this get back to about 370, 380 could be the range that we potentially will be seeing it get to. So if it was to break below our support area, I would just wait to see what happens at this area. Once it hits the 380, 378, 380 range, can we see a rejection from there? That's what I'll be looking for, was to break below. Now, if it's rejecting it, I'm thinking it's going back to 420, 425. Again, this 20-week moving average is going to be where the price is going to be trying to get back to, this 420. And then from there, can it break above that area? If it breaks above that area, we're going to be seeing this get back to about 460. And then let's look at the daily for Microsoft to see what's going to be happening this week. All right, perfect. Yep. So looking at the daily, we could be seeing it try to get back to this 398 and break below it. I would just be a little bit careful. I would just be waiting for that rejection, because it does look like while the stochastic RSI level is relatively low and it's in that sold region, we did just have a MACD crossover to the downside. So we could see this stock price trend down a little bit more. So I would just be waiting to confirm that this is the bottom. And again, rejection on 397, our support line we have here, 395, 397 range is going to be letting us know that this is about to probably start to trend back upwards. And for the daily, again, if it was to reject this bottom, it's going to be coming and trying to test 410, 412, 410 to 412. We see we have two moving averages relatively close to one another. That's going to be the 20-day moving average and the 200-day moving average. So in order for this stock price to trend upwards and get us back to about 425, we're going to need to see on the daily the stock price break above both of these moving averages and stay above it. So we can see the stock price break above these moving averages and have a strong break above it. Again, we'll be seeing this get back to 420. And then from there, all we're waiting for on the weekly is just for it to break that 425 range, 422 range, and then we should be starting to see this stock price trend back upwards to that 464 range. Any questions on Microsoft? I'll check the chat. So you check the chat. Nope, we're all good there. Okay, perfect. All right, so let's move on to the next one, which is going to be Meta, formerly known as Facebook. All right. Perfect. So here's Meta, and again, this is the weekly chart. We see that Meta, and I don't think we spoke about Meta last week, but I know previously we spoke about this top line being this all-time highs. So it's probably going to, once it breaks above the all-time highs, just start to treat it as we'll start to treat price with $5 increments. But for the current price, we can see it's been rejecting its our resistance sitting here at about 538 is where 535 is where we have resistance. If it was to break above 535, again, I'm looking at it in $5 increments. So the next place it'll potentially get to is 540. And then if it breaks above that, 545 will be the next place. But we've currently been seeing Microsoft looking like it's trying to cool down. If it was to cool down and pull back, again, we have it testing not 495 currently, which is this 20-week moving average. So if it was to break below that, the next place it's going to be coming to is about 460. It's going to be the next potential place we'll see it get to. And by that time, if it breaks below that, that'll be our 50-week moving average, which is this dark orange line we have here, will be closer to our support we have, our manually drawn support level that we have drawn here. So what I'm looking for, and then again on the weekly, is looking like we're probably going to continue to see this, pull back a little bit more, just because stochastic RSI level, again, pointing downwards in that 55 to 45 zone. And then also we have our stochastic RSI level. While it was going up, it's starting to look like it's trying to pull back down and get back to our 20 range, and then ultimately that 0 range. So I'll just be on a little bit of a lookout to see what happens. Now, if it can reject our 20-week moving average, we'll be seeing this then trying to get back to its 535 range. Looking at the stochastic RSI, the RSI level, and also the MACD, I'm thinking we're probably going to see this cool down a little bit more before it turns around, just because, again, we had that rejection on the MACD to where it was about to cross over and was going to be, we would be seeing the stock price increase, but it rejected it. And the blue line, my buying pressure, is still underneath my red line, my selling pressure. And the fact that that stochastic is pointing downwards and the RSI level, I'm thinking we'll probably see this pull back a little bit before we see that recovery. Now, once it pulls back, if it's underneath that 20 range, I'm just looking for rejection. Again, if it's going to reject, we're probably going to see it get back to 535. The last few times to where the stock price has broken below the 20-week moving average, we see it got back up to that all-time high level of 535. So I'm thinking the same thing is going to happen as well. And on the weekly chart, I have drawn here is a bullish flag. So it's still making that bullish flag. It's just making a long flag. Again, if it pulls back, we're going to see it probably come back here. And just once it hits that area, you can go ahead and then once it hits this area and rejects, you can go ahead and get into some plays and maybe have your strike price or your target price at about 430, 435 would be the area to get to. And that's on the weekly. So if we look at the daily for Meta, we can see again, it's basically pointing downwards on the RSI level. We can see the RSI level is pointing downwards. We're in that oversold region. On the stochastic RSI level is flatlining. It's hit zero before, so it's just basically flatlining on that oversold range. So all we're looking for is rejection for the daily is going to be on this 492 range, $492. Can we reject our 100-week moving average we have here? So this is the 100-week moving average. Can we reject this moving average? If we can reject this moving average, we'll probably start to see it go up and try to hit that 432 range. But if not, again, it's going to be coming down to that 465 potentially, which is also going to be the 200-day moving average on the daily chart. Looking at the MACD, we had that crossover already happen to where the buying pressure is below the selling pressure, so it is bearish. We have a little separation, so we could be seeing this try to just test this area and start to consolidate here. So all you're doing for Meta right now is just waiting to see that rejection on that support. And once we have that rejection on that support, then you can feel more comfortable and you will have then lowered your risk of getting into a bad trade, and you'll be able to trade it to the upside. Any questions on Meta? Okay, perfect. All right. Next one is going to be NVIDIA. Okay, perfect. All right, so looking at the weekly for NVIDIA, we see it's basically broken past all of our previous support and resistance lines, and now we have to draw a few new ones. So let's go ahead and draw some new support and resistance. So the first place I would draw my next support line would be, is going to be here, sitting at about $94. So if NVIDIA continues to trend downwards, it's going to then just come and try to test this $94, $95 range. If it was to break below that, the next place is going to go and test. I'm going to look at it as the 50-week moving average, which is sitting here at about $81. $80, $81 will be the next place it'll test. And we can also see that this is also a strong place to where the stock price was trying to get relatively close to it and break below it. So that's another strong support line that we have. It either broke beneath it or it rejected this price. So that's going to be my support and resistance. Again, if the stock price, that's going to be my two new support lines. If the stock price was to reject this support line and trend upwards, we're going to then see it try to get back to this 102 range, which is also going to be the 20-week moving average we'll have here. So the 20-week moving average will be around 102, 110. From 102 to 110 is going to be somewhere for that 20-week moving average. And again, once it breaks above that, we'll then be seeing it get to about 114. But before it gets to 114, it'll have to come and test about 110. So that's what we'll be looking at. Let's look at the daily chart to see. And I'll probably have to clear some lines from the daily chart so that it's not too confusing. So let's clear some of these lines. Start over. All right. So currently, stock price, if we can draw this up a little bit, we can see that it's been testing the current support line at about 100, 102, $100. It's been the support. If it was to break below that for this on the daily, again, it's going to be first coming to try to test this $90 range, and then after that, it'll be trying to test the 80 from the weekly chart. But before it tests the 80 on the weekly, it'll have to first come and test 90 on the daily chart. Looking at this, we could see a break below this just because we have the MACD had a crossover to where the buying pressure is below the selling pressure. And while we do have a low stochastic, we could see it stay underneath there for quite a while. As we can see here previously, stochastic still underneath there for a while. So we could have something like that happens. before we start to see a turnaround. What I'll be looking for is, can we break below this below 102? We break below 102, and we're probably going to be coming to see NVIDIA make it to 90. Now, if we're going to reject this 102 range, the first place it's going to reject to is going to be really quick, and it's going to reject to the 110, which is going to be our 100-day moving average. Excuse me. This is going to be our 100-day moving average that is first going to come and test. So we may see it try to bounce in between this range of 110 to 102. We could see it try to bounce in between that range this week. And if it was to break above this 110, the next place we're going to come and see it test is going to be here at about 118. Before it hits 118, again, I want to see it have a strong rejection off of this 102 range, and I want to start to see that MACD curve upwards. If that buying pressure on the MACD can start to slope in the positive direction or point upwards, like you see here where it's pointing upwards, I will feel more confident to get into that trade, just because I know that I have that upside momentum that I need. Other than that, again, whether it's stochastic or RSI levels, that is really low. Once we can start to have it point upwards and then also have our MACD point upwards, that's going to give me a lot of indication that we're going to start to see this stock price increase in value. So that's what I'll be waiting on a daily. If I can have that happen this week, then I will feel comfortable getting into a trade. And the place that I will first go and look for a trade is at, or my first target price would be here at about 111. If I see everything's positive, first target price 111, and if the stock price was to, looks like it's about to break above that, the next place I'll have target prices at is about 118. And if it's breaking below, the next place I'm looking to try to get into a trade is going to be here at 90. So if it breaks below this 100 range, I'm not going to get into a trade until I see it test this $90 range. I'll get relatively close to testing $90 range, and make it, and then all of my indicators need to make sure that they're pointing upwards. Any questions on NVIDIA? All right, perfect. Let's take a look at MU. MU. All right, so I know last week we talked about MU. Again, we said it'll probably be coming to try to test this $87 range and treat it as support. We can see last week that's what it did. If it was to break below this area, again, it's going to come and try to test this 20-week moving average. Now, if it's rejecting this area, the next place it's going to come and test is going to just come right back up to this $98 range. And then from there, what I'll be looking for is, can it break above it? If it breaks above the $98 range or $99 range, we'll then be seeing it try to get to about 105, 106 will be the next levels that it can get to. This may take more than 2 weeks for it to happen. It may take a week or two. So just be on the lookout. We're looking for rejection this week. If we can have that rejection on this stock price, we're probably going to be seeing it get back to about $97 to $100. That's where we could potentially be seeing it get to. Looking at the indicators, RSI level is low. It's pointing downwards, so I'll just be a little bit careful. Stochastic is also low, but it's hitting that, it hit that zero spot. It's tried to get back up and it's rejecting the 20 level. So we can see the stochastic start to point upwards as well. That'll give us a good indication that the stock price is about to trend up in value. And then also with that, if it's trending up, we'll have our MACD, the blue line, will start to flatten out and want to start to slope upwards or point upwards as well in direction. So that's what I'll be looking for. If we look at the daily to see if that can happen, we can see stock price increase this week. You see we're basically at the bottom. This could be the bottom, and we could be seeing a rejection. We're seeing that it's consolidating on this, is trying to confirm that this is its bottom and it wants to turn around. So we'll just have to wait. Again, if we had that rejection on here, I will feel more comfortable getting into a trade and trading this up to the upside. Other than that, I would still be waiting. And if we was to see that rejection, first place it's going to come and test, which is our 20-day moving average, is going to be at about $98. $99 is going to be around the first place it'll come and test. So we have a rejection. You could try to play this up to the $98 range and go ahead and use that as your target price. And then once it hits that, get out and wait to see if it can break above it. If it breaks above this area at $99, the next place is going to come and test is that 106. Ultimately, if you're looking at it from the weekly standpoint, we could potentially see this stock price get back to about 134, and I'll go back to the weekly. So we could see this stock price potentially get back to about 134 because it's creating that double bottom pattern. But again, it's going to have to break this 106 range first. And then once it breaks this 106 range, it would first need to hit 118, 120 before it gets back to this 133 range. So just be a little bit careful, but you could play this again if it was to break above 106. I would feel comfortable playing it more aggressive and having a 130 as my strike price for option plays, especially. I would feel more comfortable with that. But that's just me. But and then that would have to happen after I see this breakout of 106 on the resistance. Now, if we go back to the daily, again, it looks like it's creating this bottom. So the first place it's going to go and test is going to be 99. So ultimately, this week, I'll be looking for trades to the upside. If I'm doing option plays, I'm looking at strike prices at about $98, $97. And then I'll be getting out once I hit my target price that I wanted for that. And again, that's going to also be a strong level of resistance because of our 20-day moving average. You see our moving average is right here. So 99 is going to be a strong area. And if it breaks above that, that could give us that it could catapult us up to 106. Any questions on MU? Perfect. All right. Last one I had was Coinbase. Let's check out Coinbase. All right, perfect. So Coinbase is currently at 147. Our next level that we can draw support for me is going to be 200-day moving average. And you can also see if we look previously, this was another strong place to where the stock price tested this area previously. So that's a nice little support line to have. Strong support here at about 124, 123. Current 20, this is going to be that's not my 200-week moving average. It's going to be my 100-week moving average is going to be at 121. So strong area if it was to continue to trend downwards. Now, if it was to, and then I'll also draw another support right here at its current price because we can see here. Now, if this rejects this price that we have here at about 147 and it's trending upwards, the first place it's going to come and test is 164. And if it was to break above that, the next place we'll go and see a test is going to be here, which is going to be our 50-week moving average, and that's about 180. Looking at the RSI, stochastic, and the MACD, we can see that RSI level is pointing downwards, and the stochastic is in that oversold region. So we could be relatively close to finding our bottom and starting to trend back upwards. So we probably would just have to wait a little bit longer before we get into a trade, especially with that MACD. I would just wait until I see that blue line start to point upwards before I was to get into a trade with Coinbase. If we look at the daily, and then again, that's going to be if you're trying to hold this for multiple weeks. If we go look at the daily, we can see that it's looking like the same thing. Again, it's trying to break that support. And if we was to come back out, the next area that we can have resistance on the daily chart would be here at about 135. So that's the next place it could get this week. So if it was to break below 149 this week, we could be seeing this get to about 135 for the week. If it was to reject this price, again, we're going to be probably seeing it get to about 165. And then from there, if it breaks above that, we'll see it probably get to about 175. Looking at the RSI, looking at the daily indicators, RSI level is really low. Stochastic is also low. We did just have a crossover on the downside to the MACD. So again, all I'm doing is I'm waiting and I'm just trying to see, can we confirm our bottom? And if we could, and I see a rejection, I would then start to look to see if I can find a trade. At that point, if we found our bottom and we see a rejection, all I'm looking for is the MACD, the blue line, pointing upwards. It doesn't, or it's starting to flatten out. It doesn't have to be pointing upwards and above the red line, it can just be flattening out, just how you see here, where it's flattening out and it's starting to get closer and closer to crossing over. That's a good indication that you can get into a trade, especially if you pair it with a stochastic RSI level pointing upwards. If you can get the stochastic RSI level pointing upwards as well, that's a good indication that you can get into that trade and you'll be profitable on it. But basically where it's at right now, I would just wait until the market opens just to see if I can confirm the bottom completely. And once you can confirm the bottom, then you can look for your target prices. And again, if this stock price breaks below and is confirming its bottom at 135, I wouldn't use 162 as my target price. I would then use my last support line, which is 150 as my target price. So if it drops below and it's testing 135 and it's rejecting, trying to trend back upwards, then I will make my target price about 145 to 147 as my target price for that trade. Do I have any questions? Check the chat. No questions. All right, perfect. So what I'll do is I'll pass it back off to the Darius. Let's say I don't have any more stocks to go over. If y'all have any more stocks, feel free to put them in and I can go over them later. If not, I'll be going over a pattern for this one. Thank y'all.
All right, cool. I appreciate that, Mark. All right, let's take it. Got some interesting things happening this week. Biggest thing that should be on everyone's mind is Apple. There's a play on Apple. Let me share my screen. Screen 2. All right. So Apple is on tap tomorrow. They have their event where they're releasing the iPhone 16. There's an article here that talks about don't believe the hype about the iPhone 16 super cycle. Let me see if I can get this link for you. Share link, copy link. Yep, here you go. That link is in the chat if you want to read the entire article. But pretty much, this is an analyst that's pointing out some pretty good points about Apple's iPhone 16 tomorrow. So one thing that I did not know is that, so I knew that the phone would come with AI capabilities, but from what I've read, the certain AI capabilities are going to come out in batches of updates. So if you buy the iPhone 16, it's not going to come with everything as promised, but it's slowly going to be updated, as the, 18.1, 18.2, so on and so forth. You'll get the updates that way. So with that being said, that's one point that I think that a lot of people are not going to be excited for the iPhone 16. And it's pretty much, like I said, is identical as the iPhone 15. They're just promising AI capabilities. And again, those AI capabilities are going to be delayed. And the ones that come with the phone is nothing major. Like, again, you can use ChatGPT on your phone, on the web browser, or via the app, and get the same functionality or better that they're going to be implementing into the phone. Also, they talk about something major here. And let me highlight it, that it won't be available. So Apple Intelligence, or Apple's version of AI, won't be available in the European Union. So that means these markets, which I think, I don't know what they're doing, is kind of crazy, but these markets, so you have Italy, France, Spain, Sweden, and Germany, will not be able to get the Apple Intelligence. And then you also have China on top of that. So it looks like pretty much, I mean, you have small markets, but pretty much the US is going to get a small batch of Apple Intelligence, but the other larger markets, China, Italy, France, Spain, Sweden, and Germany, will not even get Apple Intelligence, I guess, for a second, and they'll update it later. And then they're also saying that more of the capabilities are going to start to roll out in October, which, again, none of this sounds good. None of this sounds good for Apple. Again, same phone as last year, AI that's rolling out slow, and it's not going to be able to, it's not going to push it. It's not going to push Apple Intelligence to the broader markets. So with that being said, I'm thinking that we may see an underwhelming take to the launch. And I think that we may see a sell-off. Now, when we look at the technical side, that's just looking at news. When we look at the technical side for Apple, and we look at it on the weekly, we can see that Apple is making a double top. There's a few lines here because we've been chart Apple for a second, but we can see that Apple tested our top line here at 230. We can see that it rejected what is that, July 8th at 230. It went a little bit higher to about 233, 234, and then it came back down with two red candles. Then we had another break here at August 26th, the week of the 26th. We had a break up to about 232, 233 again, and then it rejected again. So it's making a double top. And it looks like since we broke this level of resistance, of support at 224, we could be coming down to about 215. If we break that 215, I think the floor should be right under 210 at about 207. I would say 208. You can see that we had a break and rejection here back in June. We had a blood red candle, pretty nice size red candle, take us back down to support right at that 207. I can zoom in something for you, right at that 207, and then it shot us back up. So I'm thinking that first level of support 215, second level of support right up underneath 210 for a buy. So if you're looking to buy Apple, I'm thinking these levels would be the levels that I would pay attention to. I would be alerted at about 215, and then I would be looking for a buy if it drops to 207. Now, let me turn my indicators on. If we look at the indicators, we can see that this 20 MA is right above our support. So that 20 MA is going to be pretty much a backbone, additional support for the stock if it drops. So that means, again, right under that 210, 207, 208 is going to be a tough point to beat to the downside. And if it does break that, that means we could be coming all the way back down to 195, which currently I don't see that unless there's a catastrophe with Apple's presentation tomorrow, which Apple, I mean, they're pretty good at it. They've been doing this for forever. I don't think it's going to be that bad, but I think that we could see about 15, 20 bucks shaved off the price tomorrow. Because again, I just, from what I've been reading, I don't see anything that's standing out that could be a good idea for Apple. Also, I don't know how the sales are going for the Apple Pro Vision. They haven't really been talking about it, but we can assume that it's going bad. If Apple's not talking about it and trying to sweep it under the rug and have us focus more on the iPhone, that means something else is probably happening with the Apple Vision Pro. Also, RSI, let's look at our other indicators. RSI is at 60 and it's pointed down, so it could be coming down to the 50 to 55 range to show us that the stock's actually cooling off. And then we look at that MACD. Pending MACD crossover to the downside. Again, you can see that powder green is showing us that the strength of the uptrend is starting to weaken, and then we could be going into a quick downtrend. Again, we get this MACD crossover on the weekly, we're going to the downside. And then if we check that stochastics for our momentum, you can see our momentum is going down, right? The momentum indicator is telling us that, hey, we're at 34. It likes to check in to the downside. It's going to check in around 20. And then you have another check-in at about 0. So again, for this indicator, it loves to frequent 100 and 0 with some stops in between. And we just came off 100 on the weekly, what's that, in June. And we haven't been back up. We got close in July, but pretty much August, the majority of August, Apple has been pulling back. So that's what I'm looking at for Apple. I'm looking to see if Apple can pull back again. I think I said $20 shave, $15 shave earlier. I meant a $10 to $15 pullback. But again, 205 to 210 would be a nice buy for Apple for sure, because I do think the iPhone 17 is going to be the one. Especially if people are disappointed with this, that means that they're going to save their money, wait a cycle, and then that means we could see an explosion of buys when Apple releases the iPhone 17. And then again, once we get the iPhone 17, they would have already worked out the bugs and the kinks of updates and Apple AI and things of that nature. So I have Apple on tap for the week. And do I have any questions on Apple or any comments? All righty, let's keep it moving. All right, these two are kind of together. So I'm pairing Carvana and Car Gurus together. I know I may sound crazy saying this, but I think that we may see these car stocks move move to the upside with some strength. The reason why I'm saying this is because if we start to get these rate cuts, it's going to be easier and easier and easier to get a car at fairer terms in the US, right? So I think that Car Gurus and Carvana could stand to see some gains to the upside from that. And you can see that Car Gurus have been killing it as far as earnings. Like the last time they missed the earnings was in November of 22, right? Other than that, they've been killing the game for almost about 2 years now. They just had earnings here where they beat earnings and revenue across the board. So that's nice. And then they popped up. They finally broke that channel of consolidation. They're consolidating between here at about 24, 25 to the downside at about 22. It was a tight level of consolidation. They finally broke higher to have this level right here at 26 as support, and then off of their earnings, they popped up almost to 30. So I think that Car Gurus for a long-term hold, if you're looking for a good swing trade, I think that this could be one to hold through the rate cuts. Again, if they're cutting rates, it should be more favorable for people to buy vehicles, used vehicles too, at better price points. So I think Car Gurus and Carvana is going to be the ones that I'm going to be watching. If we look at Carvana, honestly, I think Carvana could get up to about $200. It's been climbing for a while. It was sitting down here. Let's see. This is crazy. Yeah, in May of 23, it was what, $8, $2 at the lowest, and now is at 133. I think it's one of the best performing stocks percentage-wise this year, actually. But it looks like they do have some resistance here, which you can see that they ran smack into it, and then they pulled back. I will also watch for a drop to this level in between. So right now they're sitting at 133. I would be watching for a potential drop to 120 if we break 130. So if we break 130, we could see another test at 120, and that's where I'd be looking for a buy at. Now, let me reset it. You want to be careful. There is a pending MACD crossover to the downside. It's been trying to cross over to the downside for a while. 1, 2, 3, 4 tries. This one, it looks like we're actually going to get that crossover to the downside on the weekly. And again, if we get that crossover flush and clean, the RSI is pretty high at 58. We could be coming back down to about 50, maybe 45. And then we will be sitting right at 120. And I think 120 could be a good buy to take this back up to the upside. So again, Carvana, Car Gurus, I think are going to be some good stocks to pay attention to if you're looking for something if you're looking for the next trend. Like AI is here. I think AI is kind of like fading a little bit, especially if Apple drops the ball when it comes to their Apple Intelligence. They're supposed to be an AI stock now, but we'll see tomorrow. But yeah, I think Carvana, Car Gurus is going to be some nice trading happening here. And again, you can see that we do have some consolidation around this point at about 200. And then if you want to get a little extreme, I would say 260 would be a daredevil high point for resistance. I wouldn't even look at 300, not right now, but it's going to be interesting to see. Again, this week we do have some inflation reports, Wednesday and Thursday. I think that they're going to be pretty much in line. I also don't think that they're going to change the way the Feds look at their interest rate cutting cycle. But again, what I would encourage everyone to do is find stocks that you think are going to do well when we get into this rate cutting cycle. Now, the stocks that have been performing well, are they going to continue to do well? Who knows? But we can see, we just have to use our brains a little bit and think about, okay, are people going to buy more vehicles? Are people going to buy more homes once we start to cut the rates? Probably so. But that's why I have these on my watch list: Car Gurus, Carvana, two that I'm paying attention to. All right, let's talk about this one. Go back to the day. SMCI, so AI stock. This is one of the top AI stocks. Well, it was one of the top AI stocks. Reached up to about 1,200. Now it is at 386. Where's the trade? Does this just keep going down? Is it done? I'm looking at a floor at about 358. I think that if we can touch, we can say 360. If we can touch 360 to 355, I think this could be a nice bounce point. If you want to be a little bit more conservative, you could aim at the 300. I don't know if we're going to get all the way down to 300. I do think that we could see a bounce. Now, would I buy this stock for a long-term hold? No. We all knew it was way overinflated at this time. Potentially, we could see Nvidia do something similar, or ARM. I think ARM is more closer to SMCI than Nvidia. Nvidia actually has some tangibility to its price points up to a certain regard. But ARM, SMCI, you want to watch them for moves to the downside. But again, I do think that we could get a pop. It drops down to around 360. We could get a pop back up to 500. After that pop to 500, we'll sit and look at where we are, and we could have a move back up to 600. I do not see this getting any higher than 600 to 700. I think if it pops back up from, let's say we have a run going into October, November, December. If we have a run on AI to the upside, again, I still don't see this going above 700. Still a nice swing to the upside, but you have to be careful. Again, we talked about risk management at the beginning. The stock is extremely volatile, and if I'm trading it, shares, options, it doesn't matter. I know that this is a buck and bronco. It can go up, it can go down. I would set my stops pretty tight to the side that you're trying to guard against. And then if I'm watching my calls and puts, I will go ahead and take profit. I'm fine with taking short profits, right? So if you normally take 30 to 50% profit on options, what I think would be smart, 10 to 20% just in and out, in and out, in and out, because you never know with this one. This one could fall out the sky. But do I think that's going to happen? No. But again, risk management wise, be careful. But I do think, again, it only can go down for so much before people find the value in it, buy it up and take it to the upside. So again, if we drop down to about 360, I'm calling the buy to take it back up to about 500. Do I have any questions on SMCI? Cool. Silence is a thumbs up. All right. Last but not least, PLTR. All right. So PLTR, I want to show you all something. We just got news that they're going to be added to the S&P 500. If we look at this is the aftermarket extended hours version of TradingView. But if we take a look, you can see this large green candle happen because we had news that it was going to be added to the S&P 500, which is great. That means a lot of fund managers are going to have to add the stock to their portfolio, and we could see some more movement to the upside. So the high that I have right now for PLTR is about $40. Could it go higher in the future? Yeah, if we're looking out a year and a half, 2 years, could go higher. But right now, with this punch to the upside, the first stop that I'm looking at, and again, this chart is not fully showing everything. Right now, I think it's at about $32. I think this could go to 35 before we start to see some stagnation. And then after that, we're looking at 40. So 35 is my first price target. And then 40 is what I'm looking at to the upside. Now to the downside, I would be watching 30, of course. And then I'll also be watching really tight and keep a close eye on this level right here at about 27. Really, you could bring it down to the downside of 27. So we can be a little particular and say 27.50. The reason why I'm saying that is because this is pretty much the top of this cup and handle that it was making, right? You can see it made this cup, handled a little bit, popped back out to the upside. So I would watch 27.50 to the downside. If it breaks 27.50 to the downside, be careful, because then we could go back down to the 24-25 range. But again, them being added to the S&P 500, a lot of people are going to be buying the stock, hoping that of course, when the fund managers do their reorganization and add the different stocks that they need to their portfolio, we're hoping to see a large percentage of them add PLTR along with other AI stocks. So again, 35 to 40 is what I'm seeing to the upside. To the downside, watch 30, watch 27.50. And yep, that's all I have for PLTR. Do I have any questions? Perfect. All right, cool. So I'll pass it back over to Mark so he can cover the pattern of the week. And then after that, if anyone has any questions, we can go over the demo for the Discord.
Appreciate it, Darius. All right, in a second. So since we've been seeing again a couple of the stocks that you all have to on your watch list have been showing the double bottom, I think it's great to go over it again and to show you what I'm seeing on it. So give me 1 second. Share my screen. And this is the Investopedia article on double bottoms. Again, anytime I have any questions about anything pertaining to investing, I always look at investopedia.com. I think they're one of the best places to find information and read articles on different questions you may have and different terms that you may see that you're not quite sure what it is. You can always just search it on Investopedia, and 9 times out of 10, they're going to have an article for it. So in this one, we're going to be talking about the double bottom. So what are double bottoms? Basically, they're double bottoms are just going to let you know that the stock price is about to turn and start to trend upwards. So as you can see here, the stock price was decreasing and it created this shape, and it ultimately continued to increase in value. So the double bottom is basically going to create a W shape. And if we scroll down, they should have an example. So it's not the best W shape, but they have an example of the W shape. And let me just type in double bottom and pull up images. So this is a pretty good illustration of a double bottom. Let's see how it looks on the screen. Perfect. Okay, so you'll see that the first thing that's going to happen is a downtrend that's going to occur, and it's going to hit a certain bottom. It's going to find support. And when it finds support, it's then going to reject that support and trend upwards to a certain area. And in this area that it creates where it starts to pull back, this line here is known as the neckline of the breakout area. So this is known as the neckline. And once it tests this neckline, you're then going to see the stock price start to trend back down, test our support area once more. And then from after that test, it's going to reject it and trend upwards. Now, what you're trying to trade is basically the uptrend. So once the stock price gets back to the neckline, you want to wait until the price breaks out of the neckline and breaks above it. And then from there, you can start to make trades, and you can use the very top of the downtrend where it first started. Oops, excuse me. You can basically use the very top where it first started as your target price. So you can even put it a little bit lower. Okay. So if we was to go, let me share my screen again. Sorry. Share my screen. Perfect. All right. So I'll have to share my screen again, and we go to MU. Then clear out all of this. We'll go ahead and draw. I'm going to also get rid of my moving averages. Perfect. And then also get rid of these losses. Well, I could have kept those, but that's all right. So first thing, again, we said this could be MU can potentially be making a double bottom. So we can draw the path as here's the very top of it. It's coming down, testing this area, creates a neckline. From that neckline, it's pulling back and testing our support once more. And then ultimately, we should start to see this stock price increase and go back to this area. So again, if we were to draw our first support, we have it here, and then we have our neckline at 110, 109. So what we're looking for ideally is before we get into this trade, we're just waiting for MU to trend upwards. And once it breaks above this neckline area, we can then feel confident to get into trades, and we can use 133, 134 as our target price to say that's where it's going to get to. So just keep this one on your watch. Again, we may see a little bit of consolidation before we actually see it break above. This is making a very nice double bottom potentially, and all we're waiting for is for it to break above 110. Once it breaks above 110, you can then get into those trades. And then again, I like to use the other indicators to show me that this is going to potentially continue to go up in value. So I'm looking at my RSI, I'm looking at my stochastic and my MACD. So by that point, when the stock price gets to about 110, all of those indicators should also be pointing upwards as well. We should have a nice strong stochastic RSI level pointing upwards. Our RSI level should be in that 45 to 55 sweet spot. And then we should have had a MACD crossover to the upside, letting us know that this is on the uptrend and it can get to the 130, 135 range. Any questions on the double bottom pattern? Perfect. So if there's no other questions, does anyone have any additional stocks that they want us to look at? Yep. Yvonne, you have a question?
Yeah, Mark, I was just wondering, do you or Ladarius look at like when you're day trading time of sales, any of the time of sales data that come through?
I personally don't. I'm not sure if Darius does, but I personally don't.
When you say sales data, do you mean like order flow info or like buys and sales?
Yeah, time of sales and order book too.
I haven't been. I've been looking at the VRVP. Have you been like, do you see any benefit in checking it out?
I know some people trade that way, and so I didn't know if it was something that you did and we would go over to learn, or if it was worth it. I just didn't know.
I don't normally use it. I can take a look at it. It could be something that I could incorporate into my trade style, but it's not something that I actively do now. But I could look at if it yields any profitability, then I could take a look at it for sure.
Yeah, I don't know how to I don't know how to use it, but I know traders do use it, but I'm not sure like if it's gonna like increase our knowledge a certain percent or if it's just not worth the hassle. That's what I was guys.
Yeah, we can take a look at that and then see if we can add it to like the educational piece at the beginning of one of our sessions. So yeah, I appreciate you bringing up the topic, and I'll take it down for something that we can look into. All right,
Okay,
back
cool.
to you, Mark. No problem.
Any additional questions? Any stocks? All right, so I'm going to pass it back to Ladarius and you can close us out.
All right, cool. I appreciate y'all again. Thank you all for spending y'all time with us. If you have any recommendations on topics that you want us to talk about next time, or like again, Yvonne just mentioned orders, so that could be something that we could look at next time for our educational piece. But we just want to make that portion of the session for learning. I know normally we would put the indicator breakdown, but again, we're going to have a separate session that I'll be hosting. Again, it'll be quick, short, but it'll be for our beginners who need to know how the indicators work, how to set them up, so on and so forth. But again, if you have any topics, let us know. You can reach out to us, email us, YouTube comments, wherever you connected to us from. Let us know what you want to learn, how you want to learn it, how you want to set it up, and then we can get that incorporated into the session. But with that being said, good luck on trades this week. Again, keep your eye on Apple. Let me see. Someone said something here. Can we look at spot and mid large option orders? And yep. And Rod Coattails. Yep. Ross, I appreciate that. Let me write that down as well. Okay, cool. So yeah, all right. Next time we can take a look at that. And let me stop this recording so we can go ahead and get this up on